Hey, this is Justin with DayTradeTheMarkets.com on Monday, February 11th, and the Emini S&P, the market that we normally look at on the day time frame, was just so choppy and basically did nothing today that I thought I would do a little something different and look at a lot of different markets over a longer period of time. So what I've done is I've thrown together a 24-hour chart with a 15-minute time frame, which is kind of a swing time frame, giving you a little bit of a wider perspective. For example, just on this chart, and I've got it pretty zoomed in, you can see, almost 4 days worth of information on a pretty tight chart. So this is crude oil, for example, and you can see that several days ago we started to have a pretty good sell-off. These are what we call level 3 selling aggression bars, and as a real quick primer, what our software does is looking at real-time market-driven information, order flow type information, to come up with what we call relative aggression bars, high velocity moves, and then support resistance zones. That's what I'm mainly going to focus on today in looking at these 15-minute charts. But the idea is that this information is giving you evidence, and the more evidence that comes together, the better your edge. And the real main thing I want to focus on today is what we call our relative aggression bars. And this is the idea that we're number one looking at, the software's telling us it's looking at order flow. It's looking under the surface of the market, because order flow is what leads price. And so we're trying to figure out, number one, which side is more dominant at a given moment, and then to what degree is that side more dominant or more aggressive. We've got level 1 bars, and then especially we want to focus on these level 2 and level 3 bars and ask ourselves basically, do we have follow through or do we have rejection? Because especially when a level 3 bar occurs, if you have a buying level 3 bar, for example, and it has quick follow through, it's a very good sign that a new vertical move higher is underway. Whereas if you have a level 3 bar here, for example, and it gets rejected and the low is taken out very quickly, full bar below, it's a pretty good sign of capitulation, and that the market is likely to sell off in the short term. So this can be used as a bit of a roadmap to really, number one, to help you if you're going to use a 15-minute chart as more of a swing trading basis, or to help you kind of get a bigger picture feel for your day trading. Any of those makes sense to do. So if we get back to our crude oil chart here, you can see that we've essentially, been trading between this larger picture support resistance zone here, with support in this area around 97, resistance around the 95 area. You can see that a few days ago we started to get some buying that came in. We had a run up, and you could see here when we tested this level again, this was a level 3 bar that got rejected. This one here got rejected, and then some level 3 selling bars came in. So it's giving us an idea that we're heading lower, at least in the short term. And short term's relative. This is the whole second half of a day. But I'm just talking about in short term in terms of the chart length that you're looking at. If you're looking at a 2-minute chart or a 1-minute chart, short term's going to be a matter of a few minutes or an hour. So but the same logic would apply. And you can see here, we have these level 2s testing the support zone here. They got rejected, and then we started to attract some buying. Now we're heading higher. I'd say this is kind of a key bar to watch. I have a sense that we're going to go push higher tomorrow, but if this low can get taken out and get rejected again, then we'll at least start creeping down and start testing. I would say this is another level to watch where these two level 3 bars came together, and also these two high velocity move kind of come together. So that should act as some support as well. But the first level that we'd want to watch would be this area right in here, and then this area right in here. Let's look at another market. Let's look at let's go down the list here. Let's look at the euro. This is an interesting market. You can see that starting a few days ago we had a pretty major sell-off, and you can see that again that was started with rejection of a level 3 bar, as it's because we expect the low of a level 3 buying bar to hold. And when that didn't happen, and not only did it not happen, but we started to attract some aggressive selling with that level 3 bar, followed by another one, another one, another one. You can see that sellers are obviously just dominant at that time. Now we've entered more of a smaller consolidation, where we started to attract a little bit of buying here. So this is kind of a key level to watch. Bigger picture, we're still in more of a down mode, but we certainly want to watch kind of this, basically where this support and resistance has been drawn, to see if we're going to have another leg. If we take out the low of this, we're likely going to test these recent lows and have another pretty good leg down. If we can get above this, we're likely going to creep into this area in here on you can see where this high velocity move had its lows, and then where these two level 3 bars come together. So kind of on the short term, this is an interesting area to watch here. On the on the euro. Let's look at the Emini S&P. This has been an interesting market. You can see, longer term, we've definitely been in more of an up auction, but you can see we've bounced our head against this resistance area that formed here a few days ago around 1510, again at 1510, and we started to attract some buying here and rejection of selling, so it tells us short term we're going to make another run higher. And you can see we took out this 1510 level on a level 3 bar, and we formed a new resistance around the 15 area. And you can see that we're not really attracting any strong buying at this point, but at the same time, when we get strong selling, it's essentially getting rejected. So we've got a little bit of a consolidation here. We're just going to see which side is going to win. I would say this is a pretty good area to be watching, the 1515 to the 1508 or so from the bigger picture. Whichever way, we're going to have another run higher or lower depending on which way that breaks. And if we can break through that on some level 3 buying or some level 3 selling, that would be pretty indicative of not a head fake. You can see up here when we broke through this level, it was on no real aggression, whereas you can see on when we broke through this level here, it was on a level 3 bar, so we moved higher. Same idea here. If we can break the low on a level 3 selling bar, or if we can break this high on a level 3 buying bar and have a little bit of follow through, it's indicative of another pretty decent move in one way or the other. Let's look at here's the DAX. You can see again here, pretty good selling, started to attract some buying in here, tested this level, started to attract some selling. This is an interesting level. I would say if you kind of put it together, where the real strong selling started several days ago, and then when we tested and got rejected several more days, and then earlier today we had a nice run higher that had no follow through at all and has been rejected. So this level here where the selling started a while back and where the buying has been rejected, you can see it already tested there earlier today and sold off a bit. That's kind of a key level. If we can't push through that, we would expect another leg lower on that. If we can push through this level, then we're going to go test this high. Let's look at the, let's see, here's gold. Kind of the same idea here, where we had some buying come in here and no real follow through, and you can see it auctioned high enough to attract some strong selling that came in there. We bounced off of this green area a little bit, but now we've pierced right through it on some pretty extreme selling. So bigger picture, this level here where the buying was rejected in this area and the selling really commenced is going to be a pretty good resistance area for gold. If now shorter term we have a pretty good wave of selling, but we've started to see a little bit of buying come in right there. Shorter term, it'd be interesting to see if this level 3, I apologize, this level 3 right here, if its low can hold. You can see that we tested the high, we've sold back down. We tested the low, tested the high, we've sold back down to the low as I'm speaking. So it'd be interesting to see if this level in here can hold overnight. If not, we would expect another leg lower in gold. If this level can hold, or this support can hold, we'll probably creep up to test this high, and then eventually this would be a pretty solid resistance area that we'd be looking at right in this area here, again from a bigger picture perspective. Okay, let's look at here's the Nasdaq. You can see again we had a nice sell-off with some level 3 bars. We started to see some buying come in with some follow through. Tested the green level, another buying when we were making new highs, and you can see we started to have some selling come in. Shorter term, this little wave of selling right in here would be an interesting little consolidation to monitor. If we can break higher, then we want to see if we can break higher. Same as on the ES. If we can break higher through this on some strong buying. If not, we'll probably at least test this support zone in the near future, depending on what happens with this mini consolidation that we have here. Let's see. Here is 30-year bond. You can see we're in a bigger picture in a pretty solid consolidation zone here between this green and red. You can see that also we've had 2 days ago, as you're watching this, we had a pretty solid wave of selling right here. So that's kind of the area that I would be monitoring shorter term than this bigger box here. You can see the selling started in here, and we started to attract some buying down here. And just today or earlier today, we had some attempted buying, decelerated on that high, and attracted a little selling. So I would guess we're going to be testing the low of this in the near future. But we want to wait and let the market tell us. This is soybeans, not something I look at often, but just wanted to show you that you can apply this to essentially any market. You can see we consolidated here between the red, got rejected on a level 3, got rejected on a level 3, tested the green, tested the red, tested the green, tested the red. You can see that the filter has been red the whole time. You can see we broke through this latest zone on a level 2 bar, then another level 3, another level 3. They combined here, sold off again, combined here, sold off again. So this is obviously a very bearish indication. Let's see if this support can hold, but you can see we have another level 3 that we're probably going to go test those lows. Okay, let's look at, here's natural gas. Again, you can see that we had a consolidation here between the red and green. We broke through this green zone here on a level 3 selling aggression bar. That led to some follow through here, more follow through on these bars. We tested in here on a level 3 bar that got rejected. So relatively speaking, it was pretty bearish indication. It started to see some buying in here, and this buying zone, at least for this buying aggression bar, at least for the near term, the low of that is held. So again, this is kind of a tighter consolidation, but it'll be interesting to see which way it goes on this. Can we bust through this on some strong positive aggression, or will we go test the lows on some strong negative aggression? And let's see, here's a different one. I don't look at the yen very often, but this thing's been selling off pretty hard for the past little while, and you can see in the short term we're really selling off pretty good. Some selling came in recently, buying got rejected on this red zone, more selling came in, strong selling. So we're continuing the longer term downtrend in the yen. So again, I know I went through that pretty quickly, but the point of it was just to show you. I know that if you're familiar with any of our videos, we normally show a 1 or 2 minute chart, focus more on day trading. This is more of either a background that you can use, bigger picture to help you make better sense of the of your day trading, or you can actually use this in more of a swing trading manner. This is a 15-minute chart. You can look at even longer charts for even bigger position trading or swing trading type of information, but the same logic applies in that you actually see when there is true buying or selling aggression that's coming into the market, and how the market reacts at those levels, or when those aggressive events happen, is very indicative of the near-term direction of the market. So certainly gives you an edge. It's not magic or anything like that, but it certainly can give you an edge and help you stay on the right side of the market, and help you pinpoint some pretty nice trade entries, and also help you know when to, when the other side's coming into a trade, so you can get out of a profitable trade, for example. So if you have any questions about this, let us know. We have a lot of other videos on the site. Mainly more day trading focused, but I thought just because the market that we typically focus on was so quiet today, I would just give a different look. So let us know if you have any questions, and hope you have a good trading day on Tuesday. Take care.